Hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and this is a market recap for Monday, October the 31st, the last day of this trading month. So let's talk about today's market price action, break it down in our market analysis here. So today's market performance overall was not a big mover, seeing a bit of a pullback in the markets, but as you can see, the markets are looking a lot better, and our outlook is a little bit more bullish in the shorter term. But as we see in the history here, the time as we're looking at the price action, we're slowly, gradually going up, and sometimes in between we get these little pullbacks. But these pullbacks could be just a little short-term pause. I know this week is a bit of an important week as we have the FOMC on horizon, but overall, not a good day for markets. Or if you're looking for any of the long direction, today was a bit of a pause day. So that's exactly what we saw across the board. Stock market, World Stock Index down 0.7%. So very similar performance. Crypto was down, gold was down, oil was down. So pretty much everything else was down today. So after looking at the massive move we had on Friday, we're seeing a bit of a pullback. Same thing across the board in the VT, World Stock Index. We're trying to get above the 50-day moving average, but short term, just taking a pause. Now, same thing with the crypto world. We are now actually breaking above these moving averages, and then we talked about looking for further continuation, but for that we need a follow through. So a day like today doesn't give you a confirmation. So as we take our outlook, we're still looking at a +1 on the markets. We are above the 20, and we're kind of above the 50 there, just a little bit higher than the 50. But we are looking a lot better as far as the momentum goes. So today was just an off day. So overall directions remains the same. As we take a look at the schedule, this is where we talked about our game plan in the currency room. And this is a very busy week. Most importantly, Wednesday, we have the FOMC. But outside of that, we have the RBA tonight. We have some news events tomorrow. So I think this is a very busy week. So I really like pretty much every day starting tonight with the RBA rate statement. That's coming out at 11:30 p.m. Eastern Standard Time. So we'll be meeting live for this at 11:15. So make sure you register for that class in order to get that link. So we'll be covering this live. We'll talk more about it. Look at the possible trades around the RBA rate statement. Going into tomorrow, we have the employment change out of this New Zealand. I think that's the one I'll be paying attention to. And most importantly, looking at this Joel's jobs opening. So this is one of the numbers that I know Fed is paying attention to. So something we need to pay attention to as well. So until Wednesday, it's just a waiting game. I think after Wednesday, we're likely to see a bit of a fireworks or big moves either direction, depending on how dovish or how hawkish they are. I think there's going to be big movements. But until then, I think we'll have some movements outside of the USD. But my big focus is really on a Wednesday off of the FOMC, because that will really set the tone for the rest of the week. And we still have Bank of England on Thursday, and we have employment reports on Friday. Very busy week overall. So let's do a currency analysis, see how things are moving in both the cryptocurrency world and the currency market world. So in the crypto world, again, some pullback across the board. But remember, last week we had a massive up week. We have Ethereum that was up about 13%. Bitcoin, everything else was really up. So usually when we get these big outsized moves, it kind of follows with these inside candles. And that's what we have is today, inside candle, which is again a short-term pullback. Now, looking into the the currency world, you can see where the dollar is actually still holding strong. And this is one of the things that I'll be talking about when we look at the charts, is when you take a look at the yields. So as we go into this Fed rate statement, which again, they're scheduled to hike rates, the yields are continuing to climb, which is again telling me that the markets are not really pricing in a dovish Fed. I think the markets are still expecting the Fed to remain hawkish. So I think that's where the yields is what you really need to pay attention to. And right now, yields are saying they're going higher, which means the dollar's going higher. On the other side, we have the yen, which again remain under pressure here, as the Bank of Japan did not make any change to the monetary policy last week. So it's the same story that just keep playing over and over again. The only difference is that this time around, they're just more actively intervening in the market. So $150 is the level to watch on dollar yen, because that's a level there. They can come in and try to defend it again. But again, this is the same story playing all over again. We won't see any change until and unless we see two big changes. Either the dollar pulls back across the board, or the Bank of Japan makes a change. So we already know the Bank of Japan is very committed to not making a change. So we just have to kind of look for what the dollar is going to do. Outside of that, I mean, we had good trends going in pound and euro. So notice it's just the opposite. So good trending currencies just pull back. And that's, again, okay to see. I actually like these pullbacks because that gives us a good, better buying opportunity. Outside of that, pretty standard movement across the board here within these growth currencies. CAD, Aussie, Kiwi, they're all pretty strong. I really like the Kiwi here. I mean, the strength is definitely showing a relative strength here. Aussie, on the other hand, kind of on the lower side, and the CAD remains strong. So CAD is, again, is a range-bound currency, so we get these mixed days. So, some days are up, some days are down, but just overall moving in a range. Where we have continuity in currencies like the dollar or currencies like the yen, I mean, this is where we're seeing a more directional move. Now, taking a look at velocity scores, pretty divided across the board. You can see Kiwi remains strong among the CAD and the dollar. Remember, Kiwi used to be the worst currency, and now the Kiwi is actually not doing so bad. It's the Aussie that's lagging here. So I think I like, if I really had to pick between Aussie and Kiwi, Kiwi is still my favorite long compared to the Aussie. On the other hand, we have the Swiss franc remains weak, and this is something I've talked about. This is a very slow bleeding happening in the Swiss franc. It's not really have a whole lot of volatility, but overall direction is moving to the downside. Now, euro did pull back onto the downside, but I think I'll move the euro back up. I mean, this could be just a shorter term pause. So it's experiencing some pullbacks after running up very nicely last week. Same thing goes with the pound. The yen, again, is the one that is consistently weak. So I don't mind keeping the yen at a -2. I think the yen weakness likely to continue until Wednesday, especially when we got the FOMC rate statement. And at that time, if the dollar weakens, I think the yen are likely to hold or stay strong. I think we just get that negative correlation between this dollar and the yen that's taking place. But outside of that, I think there's some decent pairings to take a look at, especially if we take a look at Swiss franc, the Kiwi Swiss franc pairing. And even though we can take a look at pairings like Aussie Kiwi, there's a nice divergence taking place. And even the Kiwi and the yen is the one that we need to focus on. So let's jump into our charting and then take a look at which setups are looking decent going into overnight and tomorrow. So looking at the charts here, we can see the Canadian. I'm going to start with this Kiwi here, because overall, if you really pay attention to Kiwi price action here, I mean, it's not moving very aggressively, but it's moving slowly and steadily. I like the fact that, if you look at Kiwi, I mean, we have been trading, in below this 20 to 50 moving average pretty much in the last 2 or 3 months. I mean, nice little rally here, consistently moving higher. I like the fact the way the Kiwi is moving. Now, it just depends on what you want to pair with. I like the price action Kiwi. Now, if you go in the Aussie technically does not look that good, but at the same time, it's supported by this 220 moving average. I think it's stuck between this wedge here, so we'll have to see tonight with the RBA rate statement. That could provide a catalyst for Aussie to go either higher or lower. And as always, we'll decide which currency pairs look good for Aussie long and which pairs look good if you want to short the Aussie. The Canadian dollar, I've had a lot of questions about CAD, especially after last week. This thing, again, is just sideways. So there's no better way to put it. Sideways my price action, not really going after a whole lot of continuity, but it'll give us some decent opportunities in the short term, but not something that you're looking for as far as the trending currency goes. The British pound, I mean, overall, it's just a pullback. I don't mind if this pulls back a little bit into the 20 moving average here. That's again, that will give us a better opportunity to kind of jump back into. So notice that we are now on a 4-hour chart supporting this prior resistance, which is now the support. If this support gives up, I think there could be further downside in the pound. But I mean, right now it's still a bull pullback to me. Same thing with the euro. Euro looks a little bit weaker. So, I mean, clearly the pound price action overall has been much stronger than the euro, but euro is kind of in the same boat here. So, but if you want to take a look at Swiss franc, I mean, look, this is a currency that's slowly bleeding away. I mean, this is the 4-hour chart, and you can see how low the volatility is, and it's below the 20, the 50-day moving average. If I go on a daily chart, you can see where the volatility was to where the volatility is. This thing is not looking bullish at all. I think this is if this is one of the currencies that you can pick that has the lowest volatility, and it has a better chance to survive because you're not really worried about getting stopped out in the short-term volatility. So that's what's happening with the Swiss franc. And I think dollar and the yen, the dollar is really sitting at the mercy of what the Fed's going to do. I mean, I've talked about this. I know Corey talked about it. We were looking at but possibly shorting the dollar on a rally here. So I like the fact the way it's setting up. I would love to kind of see this hit that 20-day moving average, and possibly we see maybe a little bit more of a less hawkish tone from the FOMC, and that could bring the dollar lower. I think this dollar could be at a critical stage of maybe establishing a lower high and a lower low. So right now we're trying to establish a lower high. So we want to see how far it gets before it peaks. And then if it starts to move lower, then we know that, okay, this was a bear rally. This is the turning point to get into. But we'll have to wait till Wednesday on that. But I mean, meanwhile, the yen seems to be still a better play, a better short. I mean, especially if it breaks the support here, I think the yen can even go down further. So let's talk about pairs that we're looking at right now. So, I mean, I'm going to talk about Kiwi against the Swiss franc. This is a pair that I've actually liked overall. I mean, you can see a slow moving to the upside. And I mean, so far we're above the 20, the 50 as well. So I really like the price action in Kiwi Swiss franc. Now, depending on how long you want to hold this for, or what time frame you want to use it. But even, I mean, it looks good on a 4-hour chart, it looks on a daily chart. I mean, usually lower time frame, lower volatility trades are better on a little bit higher time frame, because then they're slowly moving, but they're actually gradually moving to the upside. So those trades will take a little bit longer here. Let's take a look at Aussie Kiwi. This is the one pair that I'm watching tonight for the RBA rate statement. I mean, look at the strong support that the Aussie Kiwi has around this area, this 109.69. I think if it gives back this level, there's a lot more downside risk in Aussie Kiwi. If you take a look at the weekly chart, I mean, after spending, a lot of time above this level, it's just slowly pulling back. So I do like your Aussie a bit more on the short side. And even though if you get a nice little rally on the Aussie, I think this is a pair I'll come back to, especially looking for some sort of reversal. Aussie Kiwi actually looks good to me here. You can take a look at Aussie CAD. You can see it's slowly moving lower. So, I mean, I think outside of this, outside of the CAD and the Kiwi, let's take a look at Kiwi CAD. As you can see, that Kiwi CAD is pretty much doing the same thing. So I think at this point, if I have to go short, Aussie CAD looks good to me, and Aussie Kiwi looks good to me. On the other hand, if I want to go short or long the dollar, along the Australian dollar, I think then we can start pairing things up against other currencies like Aussie Swiss franc. Again, I still like this setup here. 4-hour chart and setting up very nicely here. If it breaks above this level, then I'd like to go long off that. But again, that's something that we have to wait and see for the news event to come out. So I think there'll be decent movement tonight with this RBA. But again, the biggest one is really after the FOMC. But meanwhile, keep your target short. We're not looking to hold things through the FOMC. I think there'll be better trades after the FOMC. But if there's opportunities in between, like RBA tonight or the Kiwi employment report tomorrow, we just have to kind of use the levels and keep a realistic target, use a time frame that would not be overlapping with the FOMC. So that's the game plan here. Thanks for joining. Always check the schedule for the upcoming classes. Looking for markets to be steady ahead of this rate statement. Looking to trade around the news events. So that's our game plan. And stay tuned. Till then, take care.